at Goodbody over the last number of years, we've noticed a trend amongst clients around wanting to have information about inheritance tax and how to tax efficiently transfer wealth from one generation to the next. And every day we're now talking to clients more and more about the topic and how to do that in a sensible way, and also in such a way that it meets their goals and objectives, whether that be a transfer to children or to grandchildren. A vital aspect of this is around the communication piece. So actually opening up the communication lines with your beneficiary and what they might need to consider in relation to the inheritance that they are about to receive. It's a sensitive area, so one which clients don't necessarily want to talk about, but they're equally very keen not to leave an issue behind for their children or grandchildren to deal with. So when we talk to clients about inheritance tax, for example, or having a plan around it, we would typically say the first thing to do is to actually have a plan, because the financial and administrative burden for the recipient of an inheritance is huge, and it's not something that should be underestimated. We would also say again on the communication piece to be sure that everyone is familiar with what is going to happen or what they're actually going to be in receipt of. And by that we would typically facilitate a family meeting, for example, to make sure everybody is communicated with, understands where they actually stand, and the objective being to save relationships, time and money. The other area that we would look at is around business succession. So the tax reliefs, for example, that can be availed of on transferring a business, say from a parent to a child. They're very valuable reliefs. There's a number of conditions that are associated with them. So it's very important to actually take a look at those reliefs and make sure that you can qualify for them for both the person that's passing on the business and the recipient of the business. We would also look at the giving while living piece. So that's looking at whether there's a gift tax liability now on passing on an asset during your lifetime. That's something that can be quite easily ascertained, but all the taxes may need to be considered in that, including, say, capital gains tax, for example. And then the final piece of that would be around the beneficiary needing to educate themselves in relation to what they're about to receive. So that can be things like liquidity, so needing to understand that you might have to pay a tax bill, and do you have sufficient cash resources to actually pay that bill. It would also be preparing yourself for your own financial plan and your own income needs as the years go by. At Goodbody, it's something that we do every day, so more and more we're exploring the options with clients as to how to do this. We have a range of options for actually doing that. In fact, it's something that is at the heart of Goodbody, really, in the context of itself being founded by means of a family bequest. So it's something that is deeply embedded within our wealth management offering.